Well, the much-anticipated prospectus for QR National was launched yesterday, and both the company and its vendor, the Queensland Government, are racing down the track to listing. Valued at a potential $7.3 billion, the second biggest float in Australia offers shares between $2.50 and $3 and a truckload of loyalty bonus shares and priorities for banana benders. The offer is not without its risks, including the impact of a possible carbon tax. A short time ago, I spoke to Queensland Treasurer Andrew Fraser. Andrew Fraser, welcome to Late Line Business.
Thanks for having me.
Well, your roadshow kicks off today. Lance Hockridge was stressing this is a growth stock, not a utility. You're banking on this growth, aren't you? Because the dividend yields are, only just over 2%.
Certainly this is a very durable investment. This is a to have and to hold investment. This is an investment and a sort of stock that you would look at for your child or your grandchildren's education, the sort of thing that you will put to one side and know that it will have strong capital growth prospects because it's leveraged 80% to Asian resource demand. And if you believe the story about the urbanisation of Asia, the growth in Asia, then this is a stock that you can certainly believe in.
You talk about it as a mums and dads stock, and the intensive marketing campaign is very much, be part of something big. Isn't it disingenuous to imply that just because something's big, something's very safe?
Well, I think it's a big entity with a big history and big prospects. I think ultimately that investors, whether they're institutions or mum and dad investors or other retail investors, know that exposure to the Asian growth story, to the resources demand of Asia, to the metallurgical coal demand for steel making out of the growth in Asian cities is a place where an investment is a very solid proposition. So I think the notion here that you can be part of something big, it's not only big, it's unique. It's a company that is a very unique opportunity to get into the sort of area which at the moment is driving the Aussie dollar north.
Do you think, though, that unsophisticated retail investments will be aware of the sort of quite significant risks that there are that you do have in the prospectus?
Of course, all people, individuals, sophisticated investors and otherwise need to take their own appropriate financial advice and their own investment advice. That, of course, needs to be reiterated. The point here, though, is that in terms of the fundamentals, this is a stock that is exposed to the Asian resource demand story, as I said, and therefore I think, unlike other propositions which are subject to the whim of the market, we're talking here about a business that the 90% of the volumes in the prospectus in the offer document are already contracted.
There could be some other shocks, though, one of which is a carbon tax, which I think you acknowledge would be beyond the control of the Queensland Government, and that could change the business overnight, and it's quite likely to happen.
Well, I'm not sure that anyone's going to surmise on the likelihood. There's a couple of points to make, Tiki. One, it's not going to affect QR National differently to a whole range of other stocks, to a whole range of other resource and energy companies or those leveraged into that space. Secondly, the point to make about QR National is the vast majority, a clear majority of coal hauled by QR National is in fact metallurgical coal. Queensland accounts for most of the world's seaborne metallurgical coal. And that's the key point, because there's no substitute for metallurgical coal. That's not coal for power stations. That's the coal that goes into steel fixing. And so unless you believe that construction activity is going to stop, a carbon price, whether it's a tax or another fiscal arrangement, doesn't have the same sort of impact on metallurgical coal as it might on thermal coal for power stations. So I think that point needs to be understood. The coal... we know here in Queensland better than most that coal's not coal.
Let's move to pricing, because pricing obviously is crucial. We know budget-wise you're somewhat of a distressed seller, but you don't want a stock that's going to be trading below the IPO price come your election in March of next year. Is there a danger that you might give away too much here and that the Queensland taxpayer may be worse off?
Well, obviously, if the stock trades up 1 cent on the day of listing, then I presume the opposition leader here will make that point. If it trades down 1 cent, then I presume people will say that mum and dad investors have lost money. The reality is that it will list at a price, and then the share price will move as the market sees fit. Unless it stays exactly the same as the day it lists, then people are going to be able to advance those simplistic and convenient arguments. But what we believe as a government is that this is a stock that will grow into the future, that will have those growth prospects, and certainly we believe that as a government it is a stock worth investing in. That's why we're putting our money where our mouth is and committing to hold on to a cornerstone
holding,
that will hold at arm's length from government.
There are, of course, problems with retaining a share ownership, as the federal government has learnt on several occasions before. If you're going to own between 20 and 45%, but say that perhaps in 2 years' time you might consider a further sale, there's an overhang issue.
We're not the federal government, we're the Queensland government. And when the Queensland government had the same situation with Suncorp, we, as a government, as a state, held that investment at arm's length, and we intend to do the same here with QR National. And I think the market appreciates that. The Queensland government has a very solid reputation in undertaking these divestment programs to the satisfaction of the market. The point here is that what we've said clearly in the offer document is that we'll hold to the end of the forecast period. And I think investors can take comfort from that as a government we are saying that so confident are we of those forecasts that we're putting our money where our mouth is. And what we've said very clearly is not that we'll consider selling down, is that we will sell down.
Finally, I should ask you about the international side of the offer, because the strong $8 could make that side quite weak and impact on the price tension that you're trying to get.
Well, obviously, that's an obvious point to make, but I also think an equally obvious point to make is 6 weeks ago the Aussie dollar wasn't where it was, so let's wait and see where it is in 6 weeks' time. I'm not sure that anyone's mastered the art of FX forecasting, but let's also make the point that the dynamic that's bidding up the Aussie dollar at the moment is that people want a piece of the action that is the Australian economic story, fuelled as it is by resources demand into the broader region. In many ways, the Aussie dollar, the dynamic that's bidding that up is the same dynamic that we believe will be at play for investor demand for QR National. QR National is in many ways a proxy for the Australian economic story, and that's certainly the feedback that we've had from institutional investors around the world, and I expect to see that translate into very significant demand.
Andrew Fraser, you've got a busy roadshow ahead of you. Thank you very much for talking to Late Line Business.
Thank you.